Hello and welcome to Business Incorporated live on Channels Television. We see the global markets are moving right now. Here's what's coming up. The Johannesburg Stock Exchange is reportedly courting the Dangote Refinery for a secondary listing as the company prepares what could be Africa's largest ever IPO. And Egypt's foreign currency reserves climbs to a record $56.29 billion at the end of July. And oil prices rebound after Yemen's Houthis claim an attack on a Saudi oil tanker. Well, it's great to have you join us. I'm Ladi Williams. Let's go straight into the markets now. We're seeing oil prices are up, reversing some losses logged earlier this week following reports of a fresh attack on Saudi ships by Iran-backed Houthis in Yemen. That's, threatened and guarded optimism for Middle East peace deal there. So we're seeing oil back up at this point, 1.79%. That's for Brent crude, getting back to the $80 per barrel level. WTI at 76.48, up 0.96%. And we see natural gas also up there, 0.52%, $2.69. Let's flip over to the metals trade now. And definitely we're seeing gold 5-hour chart. That's showing a breakout as price, surging above the $4,200 level, 1.51%. So we're seeing oil rise today and metals rising at the same time. Spot silver, bigger, 2.27% rise. Platinum, 0.41%. We see palladium trading at $1,375 per ounce. And copper at $6.65 per pound, down 0.11%. Let's flip over to other stories now. The race to host Africa's biggest ever IPO, that's gathering momentum. The Johannesburg Stock Exchange is reportedly courting the Dangote Refinery for a secondary listing as the Nigerian energy giant prepares to raise about $5 billion through its planned public offering. The move could reshape capital markets across the continent, raising questions about regional integration, investor access, and whether Africa's largest corporate listing can become a truly Pan-African investment opportunity. And Tanzania is confident it can achieve a record 7 million tourist arrivals this year, betting on improved infrastructure, expanded air access, and sustained peace to drive growth in one of its biggest foreign exchange earners. The East African nation is investing heavily in roads, airstrips, and visitor facilities as it positions tourism to play a bigger role in economic growth and job creation. Move on to North Africa now. Egypt's foreign currency reserves, that's climbed to a record $56.29 billion at the end of July, driven by higher gold holdings and a stronger foreign currency assets. The latest figure underscores improving external buffers as the country continues economic reforms and strengthen its ability to meet import needs and external debt obligations, even amid ongoing regional and global uncertainties. And now we pivot to our first conversation. MTN Nigeria, they've returned to profitability in impressive fashion, reporting a 707.5 billion naira profit after tax for the first half of 2026, and rewarding shareholders with an interim dividend of 26 naira per share. So we see a blowout earnings there for the first half. Profit before tax, 1.09 trillion. Revenue, 2.99 trillion. Profit after tax, 707 billion. Data revenue, 1.7 trillion naira. Voice revenue, that also increased there, but lower than data at 897.1 billion. All right, joining me now to unpack the latest earnings and what it means for the telecom industry. Let's talk to the Chief Financial Officer at MTN Nigeria, Mr. Mudukwe Kadri. Great to have you on the show, sir. Good afternoon.
Good afternoon. Thanks for having me.
So we're seeing a turnaround there with the earnings for the first half of the year. But beyond, the exchange rate environment, I remember when it was all about exchange rate losses. That has changed now. What were the biggest operational and financial decisions that made this recovery possible?
I think and thanks for having me. So if you do recall, we did have our AGM, and where we did announce some 5-point programs. So we implemented all the 5 things. Amongst them was the fact that we're going to renegotiate our tower leases to reduce our forex exposure. We also did say we wanted to reduce the amount of gearing on our balance sheet in terms of our foreign loans. We did that. And of course, we also benefited from the macroeconomic stability in terms of stable exchange rates, which, all reduced the losses that we brought forward. So fast forward 18 months on or 24 months on, you'll see that most of the things we did say we were going to do, we have achieved and accomplished. And that's what helps get the recovery back on track, in addition to the 50% tariff increase that was granted by the regulators.
All right, so it's not all about the tariff increase, at this point, but we see telecom companies continue to invest billions of naira in network expansion and digital infrastructure. How do you balance, those long-term investments with delivering consistent returns for shareholders?
Okay, so the reality is that Nigeria is still a growing market, has a growing youthful population. So if you look at the year-on-year growth in subscribers, that gives you an idea. It's almost 10% up. And of course, in terms of data subscribers, the same thing. So it tells you there is a demand. And what we've seen is that every time we put in capacity on the ground, it's utilized or congested, which then means that we've actually changed our living habits or lifestyle in terms of how we actually consume content. So if you look, most people these days don't necessarily watch terrestrial TV. I would want to assume that a good number of your followers or viewers are watching on data platforms like, YouTube or things like that. So that's what happens with time. So how do you balance that? I think the first thing is that we must make sure there is a business case to support the continued investments. Between January 2025 and June 2026, MTN Nigeria has invested 1.6 trillion naira in capex. So we're actually making those investments to improve the quality of service, basically within across the nation. And I must say up front that apart from these conscious investments, there are some things that are outside our control, like fiber cuts where people vandalize the fiber infrastructure, which then affects the quality of service. Things like when landlords lock out the tower providers and they can't provide diesel, or generally, lots of misdemeanor going out there. So all these things, we are doing our possible best to try to make sure that the customers have the best network quality possible, given the circumstances we face. But the investments are being made. That's the key point I want to make.
All right, definitely. We'll keep tracking, those investments. But looking ahead, what do you see as the biggest financial risk facing Nigeria's telecom industry over the next 12 to 18 months?
Well, biggest risk, financial risk, I don't know. I think it's just more of ensuring that we have macroeconomic stability. And I think to a large extent, the central bank is doing a good job in terms of keeping the naira stable, because if you do recall, the bulk of our capex investments are actually, imported foreign equipment, telecoms equipment, and then you need to have access to forex to that. So, the central bank has, made it easy for you to have access to forex. It's made it easy for you to buy it at stable rates, and so you can plan and build your business around that. So if that is in place, I think that is the greatest worry that I would have personally.
All right. Thank you so much, Mr. Amadukwe Kadri. I guess I'll see you again for the second half at this point.
Thank you very much, and thanks for having me.
Thank you. All right. So, see, Africa's startup ecosystem, that remained active in July, but investors opened their wallets far less than usual. We see 44 startups successfully raised more than $102 million. Funding rounds by 100,000 plus. Only that we did get, that's excluding exits. But we see for the month of July, 44 startups raised capital. But we did notice it was more of, it wasn't about equity, at this time. It was more of debt and other parts there. But joining me now is Amanda Wolverton. She's a venture advisor and investor. Joining me via Zoom. Great to have you on the show.
Good afternoon.
Good afternoon. So we see, although 44 startups secured funding in July, The total raise was just $102 million. What does this tell us about, investor sentiment in Africa's startup ecosystem today?
It appears to me that investment sentiment is extremely cautious. And this is not specific to Africa. This is reflecting globally. If you need to get money, you would need to have hard assets, infrastructure, energy assets. Founders cannot rely only on growing user base if you have a software venture or AI applications. Not only that, the questions were asked: how do you make your ROI, your cash flow? This question was asked across the board on the street. If you have heard about the latest report on SpaceX, and after a blowout revenue increase, that the stock actually dropped 10%. This is because investors are asking, you're making so much CapEx investment, how you're going to make the money back, and what is your cash flow? So this sentiment reflected into VC's scrutiny into startups as well, that they are not satisfied with investing into future dreams, but also want to see consistent cash flow as well as a defensible business model.
And we see one of the standout trends was the lack of equity financing. Why would you say investors are increasingly favoring debt and grants or alternative funding over, taking equity stakes?
This is absolutely a reflection of a risk-averse sentiment of VC investor, but also reflected macroeconomics that the 30-year treasury now is at about 5%. And investors can get a much better return on a risk-free debt, so they are less likely to invest in ownership of a high-risk equity. But not only that, because of the geopolitical uncertainty, global investors are retreating back into their home base, so they're increasingly risk averse in terms of investing in a market where they see potentially have higher geopolitical risk in Africa. So the overall impact to the ecosystem of startups in Africa is that this trend of increasing scrutiny as well as risk averse is going to continue. So it's not going to end in July or end of this year. As I see it, that investors, the winning strategy for founders of startups need to be not to chase the valuation hype, but to focus on driving profitability, cash flow, and then making a debt-worthy economic unit economics.
All right. So, what are you seeing? In the second half of 2026, do you see the slowdown continuing? Do you see investors favoring debt more than actually taking equity in some of these businesses?
In my view, the trend will continue, and this is not just reflected in Africa, but across global investment spectrum. Investors will continue to ask about how the AI investment is going to get me ROI, and then this is probably going to be more acute in the second half as more and more capitals are going to be rushing into a few big IPOs that are coming up or planned on the street. So if they can invest the capitals into the bigger IPOs, they're probably less likely to put money on the global scene into a higher risk startups, especially in areas that are more geopolitically prone to risk.
So, definitely, I know you do interact with founders a lot. What's your advice to that founder watching, right now that's, trying to take their business to the next level? What's that cheat sheet you give them right now?
I think there are two areas I need to focus on. One is to build a moat around your business model, make sure that your business model is defensible. And the second piece is to really make sure that you actually build a long-term plan for a more profitable, cash flow, consistent business rather than trying to chase the investors' pitch, hoping that you will get a cash falling from the sky, because that's less likely to happen in the second half. And then also, this is not necessarily a bad thing, because the ecosystem in Africa is going through a maturing process, even though it's painful, but it's necessary. Because a couple of years ago, the valuation, there was a venture boom, and the valuation were incredibly high. But now in 2026, it's being reset to the real value of the venture, what the market value of what the venture actually worth in the marketplace.
All right, thank you so much, Amanda Wolverton, a venture advisor and investor. Thank you for coming on the show today.
Thank you.
All right, let's get a check on the pulse of the markets now. We're seeing for the NGX about 5 basis points lower at Custom Street. We're still seeing, banking stocks under pressure. There's a lot of profit taking, happening for the banking counter, and that's impacting on the market right there. For the Johannesburg Stock Exchange, they're looking much better, 0.55% higher. I guess it's rising with the metals trade that we're seeing right now. All right, flip over to other parts of Africa. See the EGX 30, that's up 0.21% at 54,000 points. And the Nairobi Stock Exchange closing in the red. That's for yesterday's trade. All right, flip over to other parts now. We'll see for the Gulf region. Major stocks there, they traded mixed today as investors. They're waiting signs of progress to end the Iran war. And we see for Dubai there, the Dubai index up 0.24%, Abu Dhabi down 0.16%. We did see a fall in utility firm, that's Dubai Electricity and Water Authority there, impacting the Dubai index. And for the Abu Dhabi index, and the Qatari index, we see that gained about 1% there. For the Tadawul, that's Saudi Arabia, up marginally about 6 basis points, but we did see Saudi Aramco there pull back about 1%. Could be on the back of the big drop in oil prices. All right, let's get a check on U.S. futures now. We see the futures tied to the S&P Dow Jones Industrial Average. They gained today, with the S&P there with the biggest mover, 1.79% higher. The tech-heavy Nasdaq, this is about 1 basis point, near flat at this point. And investors are watching out for all of those earnings rolling out. SpaceX, AMD, influencing investor sentiment there. Let's flip over now to Asia. Asia looking good today, with South Korean stocks, leading gains there. The Kospi 3.76% higher. The Nikkei 3.66%. Hang Seng Index 0.24%. We'll flip over to other parts now. We'll see the Nifty 50 in India down about 0.18%. The Reserve Bank of India, they did have their interest rate decision, and it was a hold at this point, but I'm sure forward guidance there could be spooking investors, and also a change with their trading time there in India, also spooking investors. Let's get a check on Europe now. Let's see what's happening there. I have Lars Holter in Berlin. Great to have you, Lars. How's it looking over there in Europe?
Yeah, good to be with you, Ladi. Wow, look at that strength in Asia here with chips coming back. But here in Europe, there's actually not much happening at all. We have a little bit of a mixed bag, but no large movements here. I guess it's okay because we've been pretty upbeat here for the last 2 days, making some strong gains. And we talked about the DAX in record territory already, setting yet another record high yesterday. And, we have so much news coming out internationally. Some of the big companies you just mentioned here, looking at the US, but there's really not much coming out today in Europe in terms of news driving the market. So it seems, Ladi, that investors are already taking a bit of a break.
All right, let's talk fashion then. Sounds like fun. We see fast fashion has become extremely popular in Europe, especially with a younger generation. But buying lots of cheap clothes, that's led to lots of waste too. Now, the European Union, I guess they're taking action on that. What can you tell us about that?
Yeah, Ladi, I guess that's where the fashion isn't that much fun anymore. The EU is banning companies from destroying unsold clothing and footwear. Now, companies instead have to resell or donate their goods. The problem in the past was disposing of unsold items. Now, we're talking anything from returned articles that customers bought online to maybe items they bought in a store or that just didn't sell well before maybe the new collection came in. Anyway, disposing of such item is often cheaper than storing, refurbishing, and re-offering them for sale. But according to EU statistics, up to almost 10% of unsold textiles in Europe are being destroyed annually. And this kind of waste generates around 5.5 million tons of CO2 emissions, not to mention, of course, the trash on landfills, not only in Europe, but really, in fact, around the world.
So how will the new rules change the way, market, or change the market for retailers and customers at this point?
Yeah, like I said, disposing of unsold items is often the cheapest way for firms to get rid of merchandise. So with the option off the table now, things will likely get more expensive for them. That's because the retailers are saying that often items have to be fixed now. They're sorting and storing. It all costs money. At the same time, Ladi, customers could get better deals because if retailers end up reselling more through secondhand platforms, that will likely lower prices.
All right. We actually call that bend down select here in Nigeria. Will this new EU rule, will this solve the problem of discarded clothing for Europe now?
Yeah, unfortunately it won't. It will solve the problem for all the companies in Europe, but the lion's share of super cheap, ultra-fast fashion products comes from China and other Asian countries. The Retail Federation is advocating for those companies to be regulated and be held to EU standards as well, of course. If that's not done, says the group, the legislation would be out of touch with reality and it would just burden the domestic industry while failing to really address the problems of fast fashion in any meaningful way. So the EU is doing what it can, but Ladi, this case is really another example of how it can be difficult to really solve any problem in a world that is connected by global trade.
Yeah, the EU always looking to protect Europe at this point. Thank you so much, Lars.
Thank you, Ladi.
Let's get a check on what's happening in the world of digital assets. And we're seeing the likes of Bitcoin there, 0.72% higher, $64,000. Maybe making another run back to the 65K level. I think that has flipped into resistance at this point. Ethereum, $1,800, not able to surmount $2,000 just yet. Solana, 0.32% higher. But we see the likes of XRP, Tron, XLM in the red. So it's a mixed bag right there for the top 100 cryptocurrencies on CoinMarketCap. Let's get a check on the headlines now. See Yellow Card, a global stablecoin infrastructure provider. They've raised $40 million in a strategic funding round to accelerate its international expansion and strengthen its digital payment infrastructure. The funding round attracted investment from SE Ventures, the innovation and investment arm of Standard Chartered, Sony Innovation Fund, Polychain Capital, Blockchain Capital, and other strategic investors. With the latest raise, Yellow Card's total equity financing has now exceeded $120 million. Then we see the Ukrainian authorities, they've charged 10 people with fraud and money laundering over a cryptocurrency investment scam that allegedly defrauded Czech victims of tens of millions of crowns. The Czech news agency reported, citing the Ukrainian prosecutor's office, the Moravian Silesian Regional Police, which assisted in the investigation, also confirmed that report. Then we see Japan. They've established a dedicated cryptocurrency and stablecoin division within its financial services agency, elevating digital asset oversight to independent department as the country continues expanding its crypto regulatory framework. So those are the latest headlines right there in the digital asset space, and definitely investors are trying to get direction at this point. H1 gone now for the digital assets market. Not much happening looking at price action, but definitely keep your eyes here and we'll tell you where the money could be flowing next at this point. That's it on Business Incorporated this afternoon. That's how most markets are looking. We'll bring you more updates tomorrow. I'm Ladi Williams. Bye for now.